Good afternoon to everyone. I see some folks lurking in the shadows. If they need to move over, they can. But welcome. Thank you for joining me for this news conference and some important announcements that helps us to get ready for the legislative session. And the purpose of this news conference is to discuss what I previously outlined in the balanced budget proposal presentation that I've made to the General Assembly. And that is that I allocated $50 million for the second year of the biennium for income tax relief to continue the fight that I started in 2015 for reducing the income tax rates in Arkansas and providing more relief for the taxpayers of this state. Since that time, I know that the members of the General Assembly, both senators and representatives, have worked hard on this topic. I've listened to them. Many of them are here in this room. And so their decision points, their ideas have been very important to me as I've shaped the proposal that I wanted to present to them. And I recognize that the governor has a leadership role, and so I want to exercise that today and present my plan as to how this state should move in terms of fairness in their tax policy. But ultimately, the General Assembly plays a key role, obviously, and it cannot be done without their support, help, and guidance. And so let me first start by talking about the values that are important in our tax system. A tax system should be, first of all, fair, and people should perceive it as fair, and it should be as simple as possible. We're not there yet, but we need to move in that direction. Secondly, one of the goals of a tax system, at a state level particularly, is that we can be competitive with our surrounding states in terms of our tax rates so that we can attract citizens to this state, so we can grow our economy and create jobs. And that's the third value that I think is important in a tax system, is that it's growth-oriented. The priority I have as governor is to increase and expand in a sustainable way the economic forces of our state. And to do this, you have to have a competitive tax system, and we want to have tax policy that is growth-oriented. As you know, my long-term goal is to reduce and flatten the tax rates. I'd like to get it down to 5%. I think we can be competitive at that level. But we only do a piece at a time and still balance the budget and provide for the needed services of our state. The $50 million that I've allocated in the balanced budget that I presented was identified because that can be absorbed by normal growth. In 2015, since then, we've absorbed a $100 million tax cut. And as you know, the revenue reports show that the individual income tax collections are good and they're strong, and that we've actually exceeded the previous years because it's expanded growth. We absorbed that $100 million. Conservative looking at the future, I think it's wise to say we can absorb $50 million through normal growth. The question is how that should be allocated. I will ask the legislature to apply this $50 million tax cut to the lower income categories of our state. To refresh yourself, the $100 million tax cut in 2015 went to the middle income between $20,000 and $75,000 in income. This tax cut of $50 million will be allocated to the lower income brackets below $21,000. The reasons, again, this is fair. Before we start expanding it to other income categories, I want to make sure the lowest income categories have the relief that they have not had before. Secondly, we're able to make the greatest chunk in reducing income tax rates. And the third benefit to it is actually you're dealing with more consumers. Whenever you allocate this $50 million to a larger volume of consumers in this state, taxpayers in this state, and spread it among them, what do they do with that extra money? They spend it. And so the spending increases, and if you look at our revenue sources, it is the sales tax that's lagging just a little bit. And so this really has the greatest opportunity to expand consumer confidence. Consumer spending in this state should help us in our overarching goals of building the economy and increasing spending and putting more money in taxpayers' pocket. So for that reason, we have allocated to the lower income tax tables. And then if I might, just for a moment, step away from the microphone, but this gives us the history of it. In 2015, $100 million tax cut that provided relief to 688,000 Arkansans. The new tax cut of $50 million will be for the lower income tax bracket, and it will cover another 44%, or roughly 657,000 Arkansans. And so a large chunk will be included in this, and if you put those together, and there's a little bit of overlap, but that will cover 90% of the Arkansas taxpayers receiving substantive relief, which is 1.3 million of the taxpayers out of 1.5 million that will benefit from these two versions of the tax cuts. This breaks down the impact of the lower tax brackets, the $50 million. The current rate for those making between $0 and $4,300 is 0.9%. That will be eliminated. That costs a revenue of $22 million. The second category, $4,300 to $8,300, it's a current rate of 2.4%. That'll be lowered to 2%. The next category, 3.4%, lowered to 3%. 12.6 to 20,000, 21,000, 4.4%, lowered a full percentage point to 3.4%. You total up those revenue costs for those tax reductions, and that brings it to about 47 million, and then you have an additional 4.2 million that's needed to smooth off the tables and avoid the cliffs. Those who are in the tax policy will understand that. So the total tax cuts $50,517,000. That I would present to the legislature is the right place, the sweet spot that we can be in terms of our tax relief and utilizing the $50 million that's been designated. This tax cut will eliminate 120,000 Arkansans from the tax tables. That is progress. That encourages growth, encourages spending. The average tax cut, the largest end of the tax cut for a single person would be $156. And if it's a husband and wife, it could be up to $312. That's money at that income level that makes a difference in providing for the children, buying the groceries, buying the cars, and having a good Christmas. And so that is the tax plan that I present to the members of the General Assembly that's here. But I wanted to cover a new part of the tax plan that has not been previously discussed. The second and new aspect of the tax plan is to eliminate the state income tax for those receive pension benefits from the retired military. And so currently, as you know, we have an exemption amount of about $6,000 of pension benefits for retired military. We want to take that cap off, make 100% elimination of the taxable portion of the pension benefits for our retired military. This, as I've said before, if we're going to do this, we have to be able to not absorb that in growth, but to close other exemptions to cover that cost. That cost is about $13 million to eliminate the state income tax for our military retirees. That cost of $13 million has to be offset. And so I have presented to you, and I'm proposing that we close some exemptions in order to cover that cost and provide that benefit for our military retirees. First, let me elaborate on the reasons that I've come to the conclusion that's important. And first of all, I wanted to recognize Lieutenant Governor Tim Griffin, who's here, who's been a strong statewide advocate for this in the last session, in which I said the time's not right, we can't do it, I'm not persuaded yet. He's continued to advocate for that. I recognize your leadership, along with some of the other members of the General Assembly that are here. But we've continued to study that, and we see very clearly that Arkansas is not receiving here military retirees at the same rates as other states with lower income tax brackets or where their retirement benefits are exempt. it is clearly indicated and demonstrated to me that this is an economic driver and will be an economic driver for our state. I believe it will help us to bring more military retirees here, welcome them back to Arkansas. It's not for every veteran, because not every veteran has military retiree benefits, but it's those that have finished and earned their retirement. They can come back here and have that tax exempt. So how do you pay for it? You pay for it by, first of all, removing the exclusion from income on unemployment compensation. This mirrors the federal law, and it will allow us to adopt the federal standards. That saves us $3.1 million. Secondly, you apply the sales tax on the full cost of manufactured housing. Currently, it's only taxed at 62%. You tax it at 100% rate. That generates $2.4 million in additional general revenue. Third, you levy the full sales tax on the sale of candy and soft drinks. As you know, candy and soft drinks right now is subject to the same food tax rate, and so it would take it away from the food tax rate. It would be taxed at the rate of other goods at the full tax rate, and that would generate $13.8 million. We've closed those exemptions, and that generates $19.3 million, which allows us to pay for the cost of removing the tax on military retirement benefits, and it allows us also to have $6.3 million that would allow us to reduce the syrup tax by $6.3 million. That was supposed to be a temporary tax, and hopefully it illustrates that in this administration, temporary taxes might be, in fact, temporary, even though it's been a long temporary. And it's not a full reduction of it, but it's a 40% reduction of that tax. That money was originally applied to Medicaid, and so we would put the extra $6.3 million into the Medicaid trust fund, so it is not damaged in any way, and yet we're able to reduce that soft drink syrup tax that was imposed years ago as a temporary tax. And so we see a $50 million tax cut, and then you also see the second part of the story with tax cuts being paid for by closing the exclusions. I present this to the legislature, both these aspects of it. I hope they'll be well received, and I look forward to a vigorous debate with the members of the General Assembly. With that, I'm happy to turn it over to any questions.
The military exemption, just make sure, is this also for the second year of biennium, or will that take effect soon?
That is on a different time frame, so that can happen when we close the other exemptions. So that's tied to the time frame for closing the other exemptions. So there could be a phase-in time, but it's sequenced to be simultaneous with closing the exemption versus the second year of the biennium.
So there's not a specific set date on your proposal?
Well, the set date would be, the law would go into effect for next year, and so you can both close off the exemptions, and you can at the same time change your tax rates to exempt military retirement income.
So it happens early as fiscal year 18?
They pay taxes on a calendar year, so it would be on calendar year 2018, which would be the second half of the first year of the biennium.
Governor, have you had any conversations with your staff about expected slow growth? The Fed is meeting today, and interest rates are expected to go up at least a quarter point, and also a forecast for GDP growth is pretty slow for next year. So, have you had those conversations with your staff about taking Arkansas?
We have regular conversations with my team, and of course I have Director Larry Walther that's here, that we together watch the budget like a hawk and the revenue projections. And as I said, one of them is very robust, and the sales tax recovered somewhat this last month, but it's still lagging for the first 5 months of the year. We hopeful that it will recover and that we'll be able to meet and exceed projections this year, but that remains to be seen. So we have a very watchful eye, and so all the ingredients that you expressed are factors in when we put this $50 million tax cut that we want to absorb in the second year of the biennium. So we have been cautious for the reasons that you've stated, but even with that cautious approach, I'm confident that we can absorb that and fulfill our commitment to essential services in our state.
So you're not confident in your current forecast? You said you were hopeful.
I remain confident in the current forecast. At such time as we don't have confidence in the forecast, it will have to be adjusted. We do maintain confidence in our current forecast.
One might wonder if there's going to be a pretty strong inclination to also provide some tax cuts to upper earners in the session. I wonder what your response to that would be.
Well, I expect that there will be a vigorous debate. I recognize that the upper income levels are job creators. They're very important to driving our economy forward, and we need to cut their taxes as well. But whenever you're looking at a limited amount that we can cut this year, $50 million in the lower brackets has a much greater impact to encourage spending, to drive our economy, than $50 million does in the higher income brackets. And so I want to fulfill this first tranche, second tranche of our tax cuts with middle income and lower income, and there's no doubt in my mind but that when we come back for the final round of tax cuts or the next round, it will be for the higher income levels. So please be prepared for that, because they are the job creators, they drive our economy, but this is the right spot for now.
When you say the final round, do you mean outside of this coming session?
Well, final round is totally the wrong wrong word to use. It's the next round and no, it's not in any, I can't tell you when that round is going to be. It's going to depend upon the growth in this state, on our economic success, on our job creation. But we want to, as we grow our state's economy, we do want to be able to continue to move the tax rates down, including the high income levels, to a competitive rate to eventually get it down to 5%. Hopefully that can be accomplished while I'm governor, and hopefully we'll have some boost in that opportunity. We will wait and see how that develops, but I maintain that commitment. And I do expect, I know there's some disappointment in the legislature that we didn't include more tax cuts for the higher income levels, but as governor, I've got to make this balance. I've got to make it work, make sure that we cover education, the other needs of our state, and this is a cautious, conservative approach to accomplish that.
Are you expecting legislative effort to repeal the legislation that would allow further cuts in the sales tax on groceries? And if you do, what's your position on it?
There's discussion about it, you know, I'd like to think that everybody's going to rally around the proposal that I presented, and so that will cease all debate and we'll move forward. But we'll see. If that is not the case, then there's other bills that are filed to expand the tax cuts or to address the sales tax on groceries, the remaining part of it. We'll take a position at that time. I'm presenting this because I believe it's the best plan for the state. I'm asking the legislature to consider it, to embrace it, and you know, sometimes they catch things that we need to adjust, so we'll have those discussions.
What have you thought about the idea of using tax on medical marijuana to pay for tax cuts? That's been an idea.
It'd be premature to base anything on that. We're just now getting to the point of assessing what the tax should be, what the fees should be, and it's also, we've got to remember that this is adopted by the people of Arkansas as medicine, and so it's not like you're taxing big business to generate profits from recreational use of marijuana. That's not what we're doing in Arkansas. This is medical marijuana, and it's to delivery to patients, and so there has to be probably a more modest approach to the tax side of that equation.
When you single out soft drinks and candy and say the word tax close to those words, it sounds like the unpopular sugar taxes that have gone into places like New York and California Do you expect resistance, and if the legislature finds them as unpopular as other places, what's that do to the offset?
Anytime you try to close off exemptions, there's going to be some opposition to it, and we understand that. I do believe that when you're looking at food items, that I think the public understands that soft drinks, candy can be taxed at the full sales tax level. I assure you it is nothing compared to the idea which I oppose of trying to regulate behavior by having higher tax rates. That's not the purpose of it. It is a fair tax system that really would be taxing that the same as what the sales tax would be on shoe polish or a hairspray that you would acquire in the store. It would be the same tax that you would have on food and candy. So we're not giving it a special exemption. We're also balancing it by reducing the syrup tax, and so we're really helping the industry by that balance, and we hope that it'll be well received.
So the various bills that have already been filed to offer tax breaks other than military retirement pay, do you oppose all of those?
I will look at those to see what offsets they have. The $50 million is my plan for reducing the income tax rates. Beyond that, it is a means to provide the military retirees exemption from their income tax. And to do that, you got to close exemptions. I've set out what I think are the most logical ones to close. I suspect in the end that this will be a narrow one that we're going to push and we're going to support, and we'll have to oppose other proposals, but we'll continue to look at them. If somebody pops in with an idea to close another exemption that gains a lot of support, then obviously I'm going to listen to legislative consensus on that as well.
So do you know who's going to be the sponsors of these legislation?
I'll be working with the legislative leadership to identify sponsors for that. I know there's some ones that are very supportive of this, and we hope to have a good number of sponsors. Thank you all very much.